Wow. What a difference a week, 10 days can make in a stock. Case in point, SMCI lowers guidance, get under the lower guidance, has the report, gets some love from Raymond James, and it's off to the races. Talk about some analyst love today. If you broke all the rules of this show and you tried to buy the dip and you had H, you're being rewarded a little bit. The analysts are helping you out. The question is will the rally hold? We have a break between PPI and CPI. Not PPI, not till Thursday, but nonetheless, we got Blue Putnam coming in at 8:35, and we'll see where he's at on the inflation and recession data. It's hump day on pre-market prep. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Yep, we're up 10.5 handles after that little bit of a weak close, 59.15, established a new closing high for the move yesterday. We'll be keeping an eye on that, 59.0450. Buck pulling back for the second day in a row, down 40 cents, 108.40 or 100.43. TLT flat. We got to find out from Blue what the heck this means. Hanging out near the low of the move. USO pulling back just a tad as it got near 70, down 70 cents at 68.89. GLD on the retreat, down nearly $3, 296.52. The silver ETF, that's flat, 29.88. Bitcoin hanging out over 100K, but down $845 at 104,420. We're going to get the show on the way. Triple D's going to hop on the stage. And good morning, Dennis.
What's going on?
What's going on is they bought the dip last night. Are you surprised?
No, this is just where we are. And especially on tech. They are so hungry for tech. Every tech dip getting scooped up very, very quickly. And that's what, again, we see here, this morning. We see, when tech stocks start going, they can't stop going, aka SMCI, which we'll get to in a second. We got Trump nonstop pumping the market here right now.
Yep.
Like it's this Trump pump. This is the Trump market here. Trump pumping semis yesterday. They continue here this morning. Trump pumping the overall market. I mean, how do you fight? Like I said, last week, you have don't fight the Fed. How do you fight the Trump? You can't. So you just ride it. If you're a trader, you're riding these waves, and the waves are going here. So that's where I'm at. Question, am I sticking to my thoughts that we see big pullbacks the next quarter? I think so. I think we could Q2, but we're a long ways away from there. So I was outlining ESTN room, like it's hard to be bearish here right now because more deals are coming. We're through Q1. CPI was fine.
Yep.
I think that goes downhill in Q2, but we're not going to get a lot of those stats here for another, couple of months here, really, from the earnings front. So if we do have companies start to get hit from tariffs, margins getting squeezed, potentially, consumers being strapped a little bit more, that's not going to show up very soon. And this market doesn't look ahead. So really, when I'm looking at the markets right now, I think your title for the show, Upward and Onward, continues. That's why I continue to be buying dips, especially on tech names.
Yeah, and nothing. Let's start with the big dog. With Nvidia here. I don't have the details of all the deals, but hey, selling chips. I thought I saw some outrageous amount of money that was going to be flowing through there. Gap up yesterday, 2 days in a row with him being over there. It's also interesting. The other ones are going too, but who else was in Saudi Arabia? Mr. Musk.
Yeah.
How did his stock do? Who else was in Saudi Arabia? Palantir. I forget the joker's name. What? I should know that.
I don't remember his name either.
Yeah. So, and the good news. Good news on the TV. Good news with the chip flow. Nvidia. That's due to report in a couple weeks, but that has wind at his back. AMD, I was looking at that yesterday, and I balked at like that 110 area that cleared. Broadcom here
These
up
stocks are incredible
627.
moves.
Yeah, and then this SMCI, Dennis. Holy mackerel! Look at this thing. Where's this thing going?
No, it's unbelievable. And it was RJ that came out with the note 2 nights ago and bullish note. And it's just been off to the races since. And it goes up like 20% yesterday and up another 16% here this morning. They're looking for tech that hasn't gone. So pre-market prep, I was doing this in the STN room, same exercise. Tech stocks, not other stocks, but tech stocks that haven't gone or have dipped and haven't been bought yet. Those are all getting bought. We went through this exercise just looking, like even the tech stocks that reported disappointing earnings and lowered guidance, XYZ, bought back. Upstart was down 20%, bought back 3 days later. Affirm, bought back after being down like 15 or 17%, bought back 2 days later. IBM took a little longer with IBM, but bought back and making new highs, compared to where it was after earnings, like way above it here now. You find the tech stock that after a week hasn't bounced back from those dips, and that's why we've been saying buying tech on dip, buying earnings dips on tech. It's just working here. Some of the quantum names haven't been bought back, but RGTI just reported yesterday. Does that dip buy come in? Starting to already this morning. So I would imagine the answer is probably yes. Google's still a lagger, but Google has some problems. I don't like Google at all, so I'm staying away from Google. But keep giving us names here. Like, give us the names that haven't bounced back, because there isn't a lot that haven't bounced back here.
Well, not only that, Dennis, but what if you had good earnings?
What's that?
If you had good earnings, what did they do to you? Look at Microsoft. Look at Amazon. I mean, they
Well, they
initially
just
hit it.
continue.
Yep.
So good earnings are good, and the stocks gap and go. Bad earnings are they gap down, but then they come back anyways. I mean, that was this earnings season. The bar was just too low. So, all of these really have come back. Intel's come back. Microsoft has come back. CoreWeave's all-time highs. Gets another analyst buy rating there yesterday. Incredible, really. So we're full on raging bull here right now. Raging bull market. The CNBC and your media won't say until we make new highs, but we've been in a raging bull market here for the last month. So I think it's the same thing. Like, there's going to be more deals coming. This market feels like it wants to go to all-time highs. People are like, this doesn't make any sense. It does, though, when you stop and think about it. It makes perfect sense, because we're in a headline-driven market. And this is what we talked about when SPY was 530. I said it's hard to be bearish down here because there's deals coming. Well, this has been driven by deals and driven by Trump pumps. That is what this market, the last 50 or I guess 500 S&P handles here, has all been Trump pumps and deals. There's more deals coming. So I don't want to be short. I don't want to say, okay, yeah, this is the top, or it's all going to start to make sense. We're 2 months out from even getting data that, where if Q2 is bad for some companies, we're not even going to find out anytime soon. So there's definitely a window here where this stock market could potentially make new all-time highs.
Just a final note on SMCI. I put a question mark here between 45 and 50 because it deserves a question mark. Because when it was coming down from its recent highs back in February, it cut through here like a hot knife through butter. So pick your poison, pick your Fibonacci, pick your extension. Pick whatever you want here. But that there you go, man. That's a final technical note. So it's okay to break the rules sometimes, right, Dennis?
Stick with Palantir just for a second before we go to your
Okay.
nature. I just want to talk Palantir yesterday too, because we had a good trade in the STN room on this as well. Had the insider buy. I said it, in the STN room, and I don't know if I wasn't on pre-market prep yesterday, so I'm not sure I brought up Palantir, but it was like my number one point is that this is like a vote of confidence. The first insider buy, even though it was only $1 million, it was the first insider buy that we had in a very long time. And I'm like, I think this drives it to all-time highs. So I had bought on the insider buy at 118.37, just not in a long-term account, just as a trade. And I sell too soon. I always sell too soon, but I made a quick $4.50 on it. Like, literally, it opened at 120 and then straight up to 123. Kind of paused there most of the morning, so I took my profits. But all-time highs, bang, 130. I mean, is a catalyst, right? Like, it wanted a catalyst to go back to all-time highs. The chart wanted to take it to all-time highs. And that's what it needs. I mean, a lot of stocks just always need a catalyst. That was a catalyst. So you got to pay attention to that stuff because it matters, which probably brings us to UNH. And UNH is not a tech stock. And UNH is not, anything what the market wants right now. They absolutely hate healthcare. They absolutely hate drugs. One thing I would say with UNH, though, and I had a good trade on this one last night, is you had multiple analysts commenting on this stock. There was actually a couple downgrades and price target lowers. So if you go and look at your typical, analyst ratings, it's all chasing price here this morning. So I'll just go through it here with you. Lots of negative analyst commentary because that's what they do. RJ downgrades it from buy to market perform. B of A downgrades UNH to neutral. Baird lowers price target. KeyBank lowers price target. Wells Fargo lowers price target. Oppenheimer lowers price target. Barclays lowers price target. So it's all negative. It's literally all negative from the analysts, like in the analyst community. Why is the stock up today? I'll tell you why it's up today, and it's thanks to CNBC, because they covered it on Fast Money, and there was an analyst, I'm not sure who it was because I was just watching in the background, but I flipped it on, like I see them talking about UNH, so I turned it on late into the interview, and she was saying, I cover UNH. She's like, I want to stop coverage of the stock so that I can go and buy it for my own account. The stock went, when she said that, from 314 to 319. I think it continues here, like it's continuing this morning up because she said that. Also, Carter Worth backed her up, and people do like Carter Worth, and he backed her up and said this has been one of the best performers in the last 20 years, and it's an opportunity. I think you be contrarian, you buy the dip here. Tim Seymour also said, I think you buy the dip here. So CNBC totally moved this stock last night. You don't usually see CNBC have that kind of influence, but they really did. It wanted a vote of confidence and kind of got it. So my question is, does that CNBC report, like does CNBC commentary trump all these analysts, downgrades here this morning and lowered price targets? I think they might. I have no position. I took a good trade on it last night from 314 up to 318, 319, and I got out. I'm tempted to take a shot here. If I was to do it, it would be with a tight leash because this is not a tech stock. This is not a stock. But right now, this raging bull just might, rising tide lifts all ships. Drugs are up here this morning. I just wonder if it doesn't start to spread a bit because buy the dip has worked so well in tech. I wonder if it doesn't start a little bit here. So I'm tempted to take a long in UNH. No position yet this morning. Stopping myself out at the low of the move. I stopped myself out at 309. Don't play games with this. You don't want it to turn around and just give it all back. But I think there's that chance that, we could see this buy the dip spread into other sectors.
I was kind of hoping for the opposite effect in this one where, a lot of people that didn't puke it out yesterday are going to puke it out today. And you get all kinds of, negative analyst talk. And then, you have another bad day, but maybe on less volume. So that scenario is not really setting up all that well as far as really being able to buy the dip on it. Man, what a bad day yesterday. It closed 11:38. I mean, it doesn't feel like he's getting down there with the market. So I think right now the only viable strategy you're talking about here is the one that Dennis talked about, and that's a stop or stop yourself out in the low of the move. Just get that V bottom. Just you had your shot yesterday. If you didn't take it, you're left out in the dust.
Well, we've seen this happen with every single tech stock. This is not a tech stock, so that's why I'm hesitant. And this sector has just been a sector where money goes to die. For real, like healthcare and drugs. It's just been the most awful sector ever. But, Merck showing, well, Merck was up more this morning. Actually, it's giving some back here, but showing a little bit of life. I think that this bottom picking mentality, which has worked so well in tech, could spread. It's a theory, and it's not, there's not a lot of examples of it spreading outside of tech yet. So I'm trying to get ahead of it. Mitch, there's times, and Mitch says, why catch the falling knife? Don't play the hero trade. All of those things. But I'll tell you one thing. You can put on any trade, anything you want, as long as you know where your out is. Anything you want. You can be the hero of all heroes if you know where your out is. So on this UNH trade, it would be like risk yourself $12. You're talking about 3%. That's the setup that I'm giving you here today. I think there's the possibility that this could continue. I could see the pricing action from last night. And one thing why I trade so much after hours, people are like, why do you trade after hours? Because you often get ahead of the next day's action. You're getting the news that's stocks are gonna trade on tomorrow. Like we knew SMCI was ripping last night. We knew that UNH was ripping because that analyst, that comment that happened, and Carter Worth giving it the vote of confidence. I was able to make some money, good money on it last night. A fantastic trade. I made 5 points on UNH last night, 4 points and 5 points because I lagged out. But that's a good little trade, good little overnight trade. I'm asking if there's the potential for something else here. So I agree, Mitch. I typically don't try to catch the falling knife. I typically don't try to be the hero. But if there's any market that's going to work in it, it's a raging bull market. And that's really what we have right now. So there are times where you can break the rules. And there are times where it's going to come back and bite you. And you know what? If it does, have your out. But you can put on any trade. I'm going to say it again, repeating myself. You can put on any trade you can dream of, anything you want, as long as you know where your out is. Do not let a trade turn into an investment. Do not like UNH go, okay, I'm buying 320 and then it goes down 305. Well, it's good value anyways. I'm just going to stick this in my long-term portfolio. Don't let that happen. If it's a trade, it stays a trade. If it's an investment, it's an investment. So you can put on anything you want as long as you know where your out is. I'm not in this yet. I'm thinking about it. But right now I will tell you, the after hours tape is telling me UNH wants to go higher.
Someone made a good point too. If you want to go a little bit more broad based, I mean, XLV. I mean, you're not going to probably get the same bang for your buck, but that's something to keep an eye on. So good news with SMCI. Good news. Some positives about UNH. We all know about the chips. What's just around the corner, folks? Retail season, and we're going to get a check on the consumer. And if you're going with the first dose of news in the consumer sector, you got it last night from AEO. You heard the reaction live on STN. AEO, trade lower. Company guided revenue down and withdrew fiscal year 25 guidance. We are clearly disappointed with our execution. But they did buy the dip too in AEO. Dennis, talk about the price.
A little bit. It's still down significantly, but they bought it a little bit. But I do think this buy the dip mentality is going to spread. It's because there's still a lot of money on the sidelines, and it's looking for stocks that haven't gone yet. And they picked on every single tech stock. It's hard to even. It's so overpicked. It's like you go into you pick your strawberries, you always take the good ones right off the bat. You go into the field, you're picking like the nice ones. Then, they come in there and you just start picking everything because, there isn't the good ones left. I think that's where we're getting to. I think you're going to start seeing dips get bought on stocks that shouldn't be bought, quite frankly. They shouldn't be bought. And, maybe we're getting signs of a top when it's happening, that it's just spreading. Like you're starting to see some smaller names, starting to go here too. I mean, this is where we're at in this market. So I do think it can spread though. So if AEO was to close green or something today, that would be absolutely insane because this is a disaster. And, we had sympathy. We talked to Abercrombie and Fitch last night in the STN room. That obviously tanked too, but that dip has been bought as well. We are seeing the buy the dip start to spread a little bit. Does it spread a lot? Do they start just buying every single stock that dips? Maybe. Dash for trash, Mitch. It is. It's starting. And that is often the sign that we're getting close to a top. We're definitely, overextended to the bull side. I'm not going to say I'm not chasing certain things here, but there are some things that haven't gone yet. So the question is, are those some things that haven't gone yet? Is there an opportunity there? I think there could be.
Okay, first of all, just the dip was bought here in AEO. Got to 1023. Your stick above that filled a gap in here. It had a big old gap. I think that was just a market feeling giddy gap. That was at 1114. So I think if this is going to be a buy the dippers, I think buyers are going to step up. They're going to step up ahead of that pre-market low. It just feels like it's a buck already off it. You did have some daily lows at 11. When I looked at this stock and I'm looking at the peers, ANF man, how that stock got to nearly $200, I don't know, but that kind of looks in the gutter. But then I looked at some of these other retailers. Now I know they're a little bit different, but the charts look a lot different. TJX, more of a discounter. That chart looks pretty darn good. Ross Stores, I mean, that chart, that just continues to chug along. And I look at Burlington, and I know AEO is a little bit more for your kitty. I don't want to say kitty, but it's a little bit more teeny bopper stuff, isn't it? A little bit more.
I think
Correct.
a little bit. I don't know.
Yeah.
It's very much like A&F. So AEO and A&F are very close to the same. Used to be
Okay.
Aeropostale was in there too. Those three I always like piston
Okay.
traded together. AEO, ARO, but ARO's off the board now. So now it's like A&F. You automatically assume A&F. There's other ones there too. But as much as drugs and healthcare has been a sector where money goes to die, retail has been as well. Retail's been an epic disaster. Is there that opportunity if the bull continues to spread that some of these really beat up retail names start to pick up the slack? Maybe. So, I think there's an opportunity. I don't know about AEO today because their earnings were really bad, but I wouldn't short it. I don't want to be short anything, not at this point. We'll have a time to short stocks. It will come again, but not when they're going straight up. It's more kick them when they're down. When we get that first bad day, now people are caught, then we get a little snapback. That's when you strike. So you're shorting stocks. It's not like, oh yeah, look how overvalued it's going to short. And then it keeps going up and you're like, what the hell happened to me? A la Palantir, and you're destroyed. You got to kick them when they're down. Once they get hit, that's when you hit them. Shoot them in the back. Don't shoot them in the front. That's how you make money shorting stocks. I've made money shorting stocks for 25 years. I know. I've done it all the wrong way sometimes. Don't try to short the rocket ships. There's stuff to that. But once they get that big whoosh down, then the little snapback, it's like, oh, this is the opportunity. That's when you hit those. You hit those snapback traders. That's when you hit them. We haven't seen anything like that yet. So there's no reason to jump in right now. Maybe that happens today, but we haven't seen anything like that happen in a while here. It's been a tough market for the shorts.
We got Walmart, I believe Thursday morning, got hit after its last report. But what did they do? They bought the dip. So the retail will get in the swing with retail earnings starting with Walmart. Just one other thing I wanted to go back from yesterday, and it did hit the stock, putting some pressure. Microsoft, just as it's crawling back to all-time highs, they lay off 6,000 jobs. I mean, that is a lot of jobs. And despite the market being strong yesterday, they didn't like that. Wow. It's what are the jobs? They're talking about AI and just reorganizing and stuff. So don't know how it's going to affect the revenue. Doesn't know what it means for the price. But I mean, if you bought the dip here, it did come out with a little bit of bad news. So still well above the gap here in Microsoft. Our next thing, we'll just segue. We didn't have much for earnings, but the power generation theme. Did you want to comment on Microsoft, Dennis, or not?
No, keep going.
Okay. Oklo, 7-cent loss versus up from 34-cent loss. Now let me see here on the revenue. So there you go. You have a beat. Pat Schweiger announces a new appointment here. Oklo, let's check out the price action in Oklo.
Stock dipped initially, but again, we're in this environment where they buy the dip. So if you're selling dips on tech or energy, nuclear plays, because that is tech, you're doing it backwards, folks. Commentary from this morning, Citigroup executing on all fronts, but no fireworks with their comments. BTIG moving down the regulatory pathway ahead of first reactor deployment. Just, reading through Wedbush reiterates their buy rating. So sometimes it's good to read analyst commentary. But again, bottom line, they're buying the dip in tech names. Oklo is tech. Dipped for half a minute last night, felt like, and then it starts to come back, and now obviously making new highs, moving up. You're like, how can it rally? Well, earnings weren't great. We rally because we're in a bull market, folks. They're buying stocks that are dipping because the money manager is just all underinvested, and they need to really focus on tech. So it wouldn't surprise me if this ride continues. I actually would not want to be short this whatsoever. I actually wouldn't even mind being long.
Coming from just a comment out of City here, made progress on all fronts, but there were no large customer wins, which may weigh on the stock given the recent outperformance. So you can take that with a grain of salt. Great day yesterday. The street was all ahead of this one. Had a really good day, added over $3. So will people just sell into and take some profits? Well, we shall see. Nothing much on the dailies to keep an eye on. Your next daily high, if you're feeling really giddy about this one, is 35.07, and there was another high at 34.66. So let's just call that $35 area with some momentum. If you want some more, or just move your stop up maybe to the gap area. We've seen a lot of these stocks get up, hold the gap, and then keep on going.
One other stock I wanted to mention going back, just because insider buys seem to be a catalyst lately. We did get an insider buy in Jazz Pharmaceutical, JAZZ. So I'm going outside back to healthcare, which has been an area where money goes to die. But there is like some support down there, 98.99. We get Mulligan Seamus, director, buying 100,000 shares last night, $98.34 their average cost. It was announced 651. It is trading up $1 here right now. I think it could be a catalyst here too. So just keep that in mind. Really oversold, beat up, money's looking for a home. It's not going to go like Palantir because Palantir is so loved and nobody cares that much about Jazz. But it is something to think about because even the builder's first source kind of, went a little bit further. So they are looking at insider buys here again and running them. For a while, a month and a half ago, they didn't care about insider buys. They're starting to care right now. So keep that in mind if you're watching, your SEC filings there. Insider buys are starting to move stocks.
You know what also was an insider buy yesterday? And it was a much bigger insider buy than the as far as purchase price, but Builder's First Source. Why do I
Oh
call
my
this
God,
Bill?
Joel, you're not listening to me. I just said builder's first source. Okay, yeah, BLDR. We said it continued on a little bit there. Joel, we were working in the background, but Joel totally ignoring everything I said.
Well,
Give me your thoughts. Give me your thoughts.
Well, no, because the reason I want to mention it again is because you were arguing with me about this. You were arguing with me about this.
All right,
yesterday.
you two. All right,
You were
break
like,
it up,
oh, I don't
break it
care
up.
about Builder's First Source.
It's like you had
I don't
your-
care
no, you
about
had your
it.
senile
I don't
moment
care.
again.
I just want to
It's
buy
the National
Palantir.
Brain. You had his senile
One
moment
mistake. I
again.
make
had
one
to call
mistake
out
and
on
you're all
that.
over me. You know what? I'm going to take a break now. Let's bring Blue in.
All right, here we go.
Am I literally
I'm
just
sick
like,
of you. Just take a day off, man. I look forward to next Tuesday. I look forward to next Tuesday.
Oh my gosh. Okay, Blue Putnam is coming in. Here we go.
Blue, you got to have thick skin to come on this show.
I saw that.
right.
But you're both wrong. So what does it matter?
Yeah, you know what? Have you been talking to Lisa and Laura? I mean, come on. You got the best information on Wall Street. First of all, Blue, why did they separate? They have the CPI today, and I was ready for the PPI today. It was ingrained in my head. Why are they doing it on Thursday?
I don't know. They don't tell us why they changed the date. But I can tell you one thing: you can totally ignore the PPI. So it's okay that you don't know what day it's coming on.
Okay. All right. So let's I know you sent me a nice presentation here. So before we get started on that, why doesn't the PPI matter? Because the CPI was so good?
No, the producer price index doesn't really reflect what consumers pay. It doesn't get into consumers for a long time. It's a more volatile series. I mean, it's a very, very weak indicator. So, you're not, you shouldn't spend too much time on it. And it's not likely to move markets unless it had some kind of unbelievably huge move. And then that would be a mistake. And we've all got the email on it anyway.
Okay. So the next thing we got to talk about is the tariff impact. And we've all been worried about it. services, non-durable goods, durable goods. Of course, we don't know exactly what the tariffs are, but to talk about the impact here of tariffs on these services, non-durable goods, and durable goods, and you got data going back all the way to 2018.
Yeah, well, I wanted to give you a little perspective, but the tariffs are largely about goods. The Trump administration is really talking the trade balance with goods. And of course, they're targeting China. And the China tariffs are still 30%, which is quite high. So we know goods prices are going to rise. You're going to pay more for your toys. You already know you're going to pay more for cars that are built outside the U.S., even if they're built by a U.S. automaker. If they build them in Mexico, they got a tariff and they've already raised prices. So we know that durable goods are going to be having some inflation. And we know that discretionary goods are going to be having a little inflation. But the point I want to remind people about is that goods are only 2/3 of the U.S. economy. We're a service economy. And so service inflation is slowly creeping down. Many of us believe it's mismeasured because of the housing component and already should be lower. So, if you're only focused on tariffs, you get all kind of worried about inflation. But if you look at the total picture, hey, services are going to be negatively impacted by tariffs. We're not going to have as many international tourists. We're not going to have as many international students coming and spending money. You can already see it in the tourism sector that prices are going down. So, the inflation outlook is not going to get to 2%, I don't think, but it's not going to be particularly worrisome either. So I think this focus on tariffs raising inflation is a little overdone. Yes, it'll happen in goods, but not so much in the overall.
Okay, so the other thing that we're worried about is a recession, right? And the unemployment rate, right? Going
Well,
up a little bit. So let's talk about the economic situation. I mean, I know you were talking, the percentage probability of recession coming up or a slowdown. Talk about the recent unemployment rate and the recession probability.
yeah, well, unemployment is one of the last pieces of data to know anything that's happening. And the reason for that, well, first of all, the data's lagged a month, but that's only 1 month. The bigger problem is that companies don't lay off people when times get tough. They wait and kind of see, well, maybe it'll come back. If I let somebody go and then I have to hire them back, that's expensive. By the way, if you really want to understand that, you can read Janet Yellen's dissertation back in 1980. She actually wrote about that. why employers are reluctant to let people go in a recession, because it's hard to hire them back. And we know that employers now have largely gone on hold. They're really being very, very careful about how many people they bring in, and they're being careful about their layoffs. So the unemployment number is going to be very late to the game, but it's still fine. So if the Fed is focused on unemployment, which it is, and they're data dependent, then they're just going to be late. But they'd rather be late than wrong. So we know that.
All right, so we can talk about the Fed funds rate versus PC core inflation, staying on the inflation front here, and then we can lead that into what are the federal funds future saying? When are we going to get that next rate cut?
Yeah, well, let's take this in order. So the point of looking at Fed funds versus PC core inflation, that's the core inflation is what the Fed looks at the most. They've got plenty of room to cut. Even now, if they wanted to cut 2 or 3 times, they could do that, and they would still keep a premium above the prevailing inflation rate. So they have room to cut, but they're not cutting because they don't know what's going on with tariffs. They don't know what's going on with the economy. Lots of people have those same doubts. So let's take a look at what Fed funds futures are telling us. And what Fed funds futures have done is they've been swinging. Now this is, by the way, for the late summer next year. So think of this as predicting the middle of next year. So the Fed funds futures will get down to 3% for next summer, and then they come back up, and they're back up a little bit. Now, my view of the Fed funds market is very different than a lot of other people. Some people think the Fed funds market, the futures market, is predicting the next rate cut or the next thing. I don't think that. I think it's taking the probability weighted average of two different narratives. Part of the market participant group is thinking, wait a minute, we're going to have inflation longer. These tariffs are going to raise inflation. The Fed can't do anything. And the other part of the market says, wait a minute, tariffs are taxes. That's restrictive on the whole global economy. And by the way, you're going to cut the federal budget deficit. That's restrictive. And you're firing federal workers. That's restrictive. And all of these things suggest that, hey, wait, maybe we'll have a recession. And I'm certainly in the camp that a recession is the base case. So your probability is that either we stay on hold or we go down to, say, 2%. But you're not going to be in the middle. And that's where the Fed funds rate is. So please don't take these things as expectations. They're pricing two different scenarios. So what are they pricing? Let's take a look at the recession probabilities. Now, this is my own model coming out of Fed funds. And what we've got here, I don't
What? Yeah,
I didn't give
right.
you the graph I want. But anyway,
That's
basically
okay.
the probability of a recession was rising while equities were falling. And then since we've gotten the recovery on equities, we've actually seen a little recovery in the expectations of a recession. So this is how I interpret the federal funds rate. There's about a 55-60% chance we stay close to 3.5 to 4. And then there's a 40-45% chance by the middle of next year we'll go down to 2%. Those are those two scenarios. And so you're watching the recession probabilities. And in the last 2 weeks, recession probabilities have declined. So things are looking a little better. It doesn't mean things aren't slowing down, but they're looking a little better.
What about throwing that in there? It looked like some people were pulling back on the GDP growth, or taking it negative, and I think it was the Atlanta Fed, and I hear they're kind of notoriously kind of hawkish on stuff. Best case scenario, can you give us the next couple GDP prints?
Oh, it's going to be pretty interesting. So the first quarter print was -1. The second quarter print is going to be +2. And the third quarter print is going to be +0.5.
Okay.
That's about as far out as my crystal ball goes. And of course, it's incredibly murky. But I'll tell you what's going on. The first quarter was a huge reaction to tariffs, but not in the way people necessarily expected. Everybody front-loaded bringing in goods, particularly merchants. Everybody from the big box stores to companies that needed the parts and everything, they front-loaded. And so that sent the U.S. imports way up. Imports subtract from GDP. So they took us into negative territory. Guess what's going to happen in the second quarter? Imports are going to decline big time. So we're going to bounce right back to where we were. So that's the -1 to +2. So, what does that mean? It doesn't mean anything for GDP, but it means a lot that people are responding to tariffs. They're trying to figure out how to handle them. Companies are doing all they can not to raise prices. And that's why they did all that front loading. But they know that if this thing lasts a long time, they'll have to bite the bullet. But we don't know where the tariffs are going after the next 90 days.
Right. Oh, so you had to pull forward a lot with the goods and stuff. And just going off the board here from the chat. How are we going to have a trade balance if we can't reduce the trade deficit with China?
First of all, we're not going to have a trade balance. The U.S. is the world's reserve. The dollar is the world's reserve currency. The U.S. is one of the most dynamic economies in the world. And guess what? That means it attracts capital. And when you attract capital, you're going to run a current account deficit, which includes services and goods. And it's going to be very hard to get anything like coming back to balance on a trade deficit basis. It's just not going to happen. China will probably ship more goods to Asia and India and less to the US. They've already tilted in that direction. And if the tariffs stay at 30%, put some extra money away for Christmas toys. 80% of them come from China.
Hey,
All
gonna
right.
hop on here for a sec, Blue. Just a question. I've just been following along and intrigued by what you said has been kind of your leading indicator for a recession, which I believe has been the continuing claims. Just wanted to ask if that is still something that you're focused on as like a top economic indicator, and like what have the recent continuing claims data done for a potential signal of recession or not recession?
Yeah, continuing claims is something we watch because unlike new claims, these people haven't just lost their job. Continuing claims, they've been unemployed for quite a while
Yeah.
and they can't get a new job. So this gives us another reading of that the job market is tightening even without laying off people on net. So, so they still, you get a hiring here, you get a layoff there. But with continuing claims, it's just telling you how difficult it is to get a new job. And it's difficult. Now, the continuing claims are slowly creeping higher, very slowly. They're not screaming recession, they're not screaming anything, but they are slightly suggesting that every month the job market's a little harder to get a new job than it was before.
Yeah. What level of continuing claims would you be looking for, or where you would be, maybe like pounding the table a little bit more on recession fears? I think we're around like 2 million jobs or so with that every couple week data point right now. Is that right, Blue?
Yeah, I mean, I'm a visual guy, so I draw my pictures. I just want to see the line moving up sharply, and then I'm going to get really
I hear ya.
worried. But again, the continuing claims will be creeping higher, but they're not signaling anything serious yet. It would take,
Cool.
we'd have to move up a 5-10% from where we are for me to get super worried. But that's where we're probably
I
headed
gotcha.
by the end of the year. Again, continuing claims are not very fast either. They're a lagging indicator too. They're just a better indicator.
Yeah.
All right. Let's talk
Gotcha.
about
Thanks for that, Blue.
Yep. All right. Thanks, Spencer, for hopping in here.
Yeah.
So let's talk about the elephant in the room, the TLT.
Yeah, the bond market. So the 10-year and TLT if you're buying the ETFs and so forth, but that market is, I think, going to be surprise people. Even if we get rate cuts, I think the yield curve steepens. So that means short-term rates go down and you don't get as much of an impact on the bond market. You might get a little. So you might get a little lower yields. But my view is the bonds are going to be increasingly following the inflation pattern and be a little less worried about growth. So if we have a recession and the Fed cuts rates, yeah, bonds might rally, but not much. Now, I do think equities would rally quite a lot if we cut rates. That would be like, whoa, let's go. Equities love lower rates. And part of the problem here is actually a third market. It's the dollar. Many of the U.S. Treasuries, particularly long-term Treasuries, are owned by foreign central banks, foreign sovereign funds. Huge appetite outside the U.S. And so the dollar really matters to those holdings. And the big question of the dollar, there are two big questions. Do we have a debt ceiling problem this summer? I don't actually think so, but it's going to be down to the wire. And then who gets to replace Jay Powell? Is that the end of the Fed independence? And if we lose the Fed's independence, we lose the role of the dollar as a reserve currency. And the bonds are scared of that. So the bonds have a lot to think about besides what happens to the Fed funds rate.
From one economist to another, and I don't mean from me to you, Blue. How would you grade Mr. Powell? We've heard some mixed signals in the markets here. I think I have my narrative. I think in 2019 we were on the path to start raising rates. We had a little bit of a hiccup in COVID, supply chain. Yeah, it wasn't, was it transient? Was that the word that he used?
Yeah, he used that word. Actually, he did use that word again.
Yeah, so
Transitory.
transitory.
There you go, Joel.
Thank you,
Gotcha.
Brent. So, how would you grade him?
I give him a pretty good grade now. I put the emphasis on now because he's been coming up a very steep learning curve. And we're talking from 2017, 2018. That period you mentioned, he started raising rates in 2018, and they cut rates before the pandemic happened because equities swooned. Equities had dipped almost 20%, and he got scared and he cut rates, and then we had the pandemic and rates went to zero. That, I think, was a learning curve for Jay Powell. By the way, Jay Powell is a lawyer that comes out of the private equity world. So it's understandable that he would have a pretty good learning curve to go up. But he has done very well on the learning curve. So he's out of kindergarten, he's out of high school. He's still probably a sophomore in college, but he's doing pretty well. He's definitely a B student, maybe even an A student now.
Okay, all right. That was an extended session with Blue Putnam, consultant, former chief economist at my old stomping grounds, the CME. Have you seen that stock lately? That thing just made a new all-time high. Blue, hope you have some of that stock. But anyways,
great earnings,
Yeah, that's funny how that works. All right, Blue, thank you, and we'll talk to you again soon.
Thank you.
All right, we are back with our regularly scheduled programming here, and we got a little treat today coming up in the STN room. If you guys, if you haven't done your free trial yet, maybe today will be the day. Triple D is put together a little presentation on how he gets out of losing trades. Huh. I didn't think anybody had losing trades, but anyways,
nobody on Twitter needs this presentation because they don't have any losing trades ever. So, but if you aren't on Twitter and you actually have losing trades, if you wanted to do the free trial, 10 o'clock today to 10:30, I'm be teaching on risk, managing risk, discipline. Title of the presentation is Discipline, Managing Risk. And we're going to jump into what is discipline, cutting losses with different time frames. We'll talk about hedging your strategies, which obviously is managing risk, and just understanding those market relationships. So that's the presentation for today at 10 o'clock. If you're interested, check us out. Free trial.
Okay,
and just want to say
Brett,
real quick too, this is a topic that the chatters, the community members in STN like asked us for. Like one day in the chat, a couple people were like, "Oh, this would be a really good topic." I think it was like last week that somebody brought this up, and we're turning it around. Dennis,
I think it was Mr. T.
Yeah, thank you, Mr. T.
I
Dennis
pity the
turned
fool
it
who
around
messes with T.
in just a few days. So I mean, yet another good reason to like see if you want to get involved in STN. If there's topics that you'd love to learn about, you can ask and we can deliver. Just wanted to say that. Thanks for
what we really are right now is group mentoring. What the STN chat room is, like, it's group mentoring where we're literally just interacting, answering questions, doing some live trades, giving some good ideas, and we've done really well with our hit rate so far. But it's really group mentoring is what it is.
Yeah, well said.
I mean, I just think about when I started trading. The reason I was probably successful was because I was in an office. I was in the Bright trading office, and I had people like Joel Elconin, like who had been trading for a long time. They'd been trading 12 years before me, 13 years. I think you started 86, and I'm, 99 starting. And I'm like, I didn't really know what I'm doing. And you're sitting there and you're trying to help me and, breaking stuff down and kind of holding my hand. And there was other floor traders in there. And that's the reason I became successful, probably. Like to do it on your own and sit in a little room and, think you're just going to watch CNBC and you're going to get these ideas and make a lot of money. I mean, it's all about learning. So, maybe you seasoned traders don't need this out there, but maybe you do. If you're interested, check us out.
Especially over the last few years since COVID, as you know, the retail investor has risen to some serious prominence. I would guess that this is probably the biggest issue that we have in the retail space right now is that there's no mentorship. People are singular in their trade caves, in their basements, and they need some community, and they definitely need some mentoring. So good way to put it, Dennis, for sure.
Yeah, Day by Day said he brought it up too. Thanks. Obviously there's multiple people in there. So I know Mr. T brought up Day by Day. Thanks. It's a great suggestion. Going to be a good presentation here today. We're going to try to do this once a week in there where we take like 30 minutes, pencils down. Let's just teach something here right now. I'll be doing probably a lot of the teaching, but we're going to get other people. Obviously there's other people in the room, Christians in the room. Money Mitch comes in there, and we're going to get more Money Mitch, but there's lots of other people coming. Me, Schneider, lots of people coming there. So
Christian's on every day at 2 to 2:30.
Yep.
I'm usually on with him, and CC Legator's on every Friday to talk about the options. But we only got
every Wednesday.
Take it every Wednesday. So let's go to Chaikin. Let's go to a Chaikin stock here.
Oh gosh. Sorry. Chaikin gives us a lot of good picks. This one's not doing well here this morning. So AUR is getting rocked. Aurora Innovation. I can never say that word. Aurora. It's like the suburb of Toronto, but I still can't say it. Aurora. AUR. So we had to dig on this one because I don't follow the company very closely. And Brent did some fabulous digging and said, this is related to Uber. And I'm like, I didn't know that Uber owned a huge chunk of Aurora Innovation. But the reason is Uber did an offering last night that is dilutive to AUR. So interesting, when you get, different, offerings and stuff, sometimes you just think it's automatically dilutive to its own company, but it was actually dilutive to AUR. So AUR is trading down substantially on that. It's bouncing off the lows. And if you don't follow this company, Mark Chaikin, gave it to us there, just talking. And it's around the same price. It's around $7 when he started talking about it. He's been talking about this even on pre-market prep a long time ago. It's the driverless semis. So they've got a company that's a driverless semis. Similar to what Tesla, obviously same thing Tesla's doing, just different company. So I like the concept, but they're pre-revenue here. They're just, getting into it. So obviously, they need to raise money. They need to figure some stuff out. So, it's got a long road ahead, pun fully intended. But, today is definitely hit a pothole here today, down 18%.
Uber owns about 20.
Okay. Sorry.
Yep, 28%. Yep, we did some digging in the filings going all the way back to 2024. What was the other one, Dennis? Was it Toyota? Toyota also has a small stake in Aurora, I think like 3 or 4%. We learned a little bit about this company last night, and I would just point out that we learned because we were doing some digging. There was a news item attached to it. We were trying to make some sense of the news item. I went and dug in some of the SEC filings. We were like, oh my gosh, this is, Uber has a 28% stake in this company. Toyota has a 3 or 4% stake in this company. Use those news catalysts to like learn more and do some more research about stuff that is crossing the tape, in my opinion.
And it's a new relationship to trade. Like I never really follow AUR, never make any trades on it. I know it because of Mark Chaikin. But all of a sudden, now there's a relationship with Uber here. So it's just good to know. And Toyota owns some of this too, apparently, you said, Brent.
Yep, Toyota. Yep, also small stake.
Wow, look at GM back over 50. 50-51. Look at that thing. Tariffs? No tariff? Look at that. That's unbelievable. It's about to fill a gap. You get a strong market too, and Ford's has moved up too. But got to hit on Tesla. If you go with the president of the United States of Saudi Arabia, and you go on TV, what's your stock going to do? Go down?
Catalyst.
Yep.
Stocks all want a catalyst. And we joked on this in STN room last night too. I'm like, when we were originally doing Stock Trader Network, I wanted to call it like catalysttrading.com. And you said, Brett says we can go buy that for $17,000, catalysttrading.com. I think we'll stick with Stock Trader Network, but we talk catalysts all day long. What's the catalyst? Like I am a catalyst / headline trader. Catalyst. Why I brought up Jazz. It's why I brought up Palantir yesterday. I'm like, you got a catalyst here. You have the first insider buy I've seen in years on PLTR. it's probably going to be a catalyst. You had a catalyst last night on UNH. Whether it continues or not is still to be determined because it is in the gutter. It is a hated sector, but you do have a catalyst here. That catalyst last night was that analyst in front of like the 200,000 people who watch Fast Money said, I'd like to stop coverage of my stock so I can go out and buy it. That's what Michael Pachter said on the show. Remember King Digital? And I was like, I'm going to buy that right now when he said that. And the stock got taken over. Now UNH isn't getting taken over, but that's how much that analyst was convicted. So that's a conviction statement when somebody says something like that. And the stock went from 314 to 319, just like that. It hasn't looked back. All this negative analyst commentary happens today. So again, just talking about catalysts. That's what we talk about, continuously. Obviously this is, the way I trade. If you called, what am I? You've got a lot of technical traders out there that use charts. I don't really use charts. I use catalysts. I try to get ahead of catalysts. I try to get ahead of like what the story is. I mean, there's obviously different ways to make money in the stock market, but catalyst-driven trading is a great way to get ahead, and there's some great trades off that.
Okay, price action, you can see trading up at the highs of the pre-market session, 344.90. Not much up here. You could just, if you're looking at this for daily targets, you can just look at, we're above there was a high at 342.40. Wow. Then it opens up to 354.98. So psychological 350 area. Also, I think did they have another catalyst with their robot? Did they do something? Did they tag?
Yeah, they did. They posted a video, another video of Optimus yesterday in the morning, and that was the catalyst that really drove it here. Like, I think that was the big catalyst yesterday. Like, they're
Did
getting
you watch
excited. It was doing a dance. It was doing a Trump dance.
Okay, there you
like
go.
A little Trump dance like that. It was doing all. So this is again, watching social media, for these catalysts, it's there too.
You know what it was, Dennis? It was the YMCA.
Was it? Is that what they were doing? The
Yeah.
robot was doing the YMCA.
Yeah.
I've said it all along. I think Optimus is going to be huge. I think it's going to be a huge revenue driver for it. And I've probably overstayed my not being in this stock too long. I obviously have, and I've been trading it from the long side. I did trading it the other day. Day trading it from the long side. I still have some stock in the long-term portfolio, but I'm not like what I was. It's not 10% of my long-term portfolio anymore. I kind of wish it was right now. Wow, it's been an incredible move here. I think dips should be bought on Tesla.
Okay, let's see. So earnings pick up tomorrow a little bit. The Cisco Kid we have coming up. We have Baba, Walmart, Take-Two, Deere. We have those earnings coming up. Tomorrow we got Jim Tassoni coming, and I don't know if he's following his rules. He's probably stopped out of that spy trade a long time ago. But
he
we know he likes
to get long too. Jim's a great trader, so he made a short. He made a turn around, and got long, and to be up going on that. And remember, he put on that short pretty early too, so I don't even think he lost on it.
Yeah, he did. It came back, but whatever. Well, that's the information. Dennis, any closing comments here on this? Looks like, I don't want to say Wild Wednesday or Wacky Wednesday. It just seems like Winning Wednesday.
Winning Wednesday. It's definitely going to quietly. Retail is not having a great day, and that's off the AEO. So just be careful. Like, I can see Nike's got 149,000 shares sell on balance here right now. You could see AEO, it's being down 12% right now, hit retail. XRT trading in the red this morning. So it's not just like everything is just rocking and rolling. It's the same story kind of as yesterday. Tech stocks, Palantirs, Babas, AMD, Nvidia's leading the way. And then you've got a lot of red. Like, I would say the majority of stocks on my screen this morning are amazingly red. So despite being up 12 points in the S&P, I think the breadth is really bad today. So keep that in mind if you're trading. Like, we're definitely not, just ripping higher on everything today. It's being driven by just a few select players here.
All right, that's it for this version of Pre-Market Prep.